Let's go to the business news now with Nicholas Poynton. Nicholas, ANZ Bank is bank number 2 to reimpose limits on low deposit lending?
Yes, ANZ, they have followed the lead of ASB to reimpose these loan-to-value restrictions. And to bring us up to date how we got here, way back in April, obviously, in response to COVID-19, the Reserve Bank scrapped those LVR restrictions, and they required that banks have that no more than 10% of new mortgages could be to people who had deposits of less than 20%. And these were removed to ensure that there was a steady flow of credit flowing throughout our financial system and really soften the downturn that we were about to see at the time. But the removal of those LVRs in conjunction with all this other monetary policy, record low official cash rate, we've also seen this big large-scale asset purchase program, which is essentially money printing. This has helped fuel an overheated housing market, which has been largely taken advantage of by property investors. So the RBNZ did announce earlier this week they had plans to consult with the retail banks to about bringing these LVRs back in March. But look, the ASB, they jumped the gun yesterday. They wasted no time. It's immediately reimposed controls on investors who will need a minimum deposit of 30%. And when that announcement was made, the bank's CEO did make some quite strong comments saying that if the increase in investor demand continues, it could lead the country down a potentially unsustainable path. So this announcement, when it did come out at the time, it did raise the question, would other banks begin to follow suit? Would it result in a domino effect? So this morning, I spent most of my morning putting in calls to all the banks, and ANZ was the only bank who said that they were going to follow suit, and they would require deposits from property investors to be increased from 20 to 30%. This followed a record month of lending for the bank. More than a third of its home loans last month were to property investors, while less than 20% went to first home buyers. And once again, the bank had some quite interesting comments here. They were saying that it's in everyone's interest for residential property prices to be sustainable and for home ownership to be accessible to all New Zealanders. So Kiwibank and BNZ, they told me that they continue to be prudent in their approach to lending, but they wouldn't be making any changes at the moment. And Westpac, well, they actually never made any changes when the LVRs were scrapped back in April, so they didn't really have much to say. But look, this is really interesting because we now have a situation where more than half of the major banks in the country, they're not, they've sort of already reintroduced these restrictions targeting property investors. I'm curious to know what they have to say. Will they be lining up at the doors of, the BNZ and Kiwibank, knocking on their doors to try and get loans to buy more properties?
Interesting. Hey, you've got some new figures that show the recovery around the manufacturing sector and the job market while the handbrake's going on?
Yeah, a little bit. It's just slowing down. We couldn't say the handbrake is maybe a bit too strong, but it is slowing down a bit. So we've got a pair of reports from the BNZ Bank today. The first one out was the Performance of Manufacturing Index, or the PMI. And remember, with this particular reading, anything above 50, that signals growth. Anything below signals contraction. So it came in at 51.7 for October, but it did take a bit of a step back versus September. The employment sub-index, that did rise slightly to 52.6, which is a positive sign. It means that jobs are being added to the sector. But what BNZ's senior economist had to say was actually quite interesting. He says, just because those lockdown restrictions are now behind us, they are now essentially a thing of the past, it doesn't truly mean that the economy, the road ahead, the path is clear for a strong recovery. He says firms are still working through many issues. A lack of certainty, that's one, and I'm sure we're probably going to hear a little bit later, is congestion in global supply chains, getting things into the country, to be able to make stuff. And look, while the run up to Christmas may be looking a little bit rosy, there's still a sense of reservation about what the first half of next year will look like. So also out today was the latest job listing numbers. It followed a similar trend to the PMI. We did see an increase month on month, but not, albeit at a slower rate that we saw in September. So job ads increased by just under 6%, still down by about 16% on last year though. BNZ, they say there is a real sense of underlying recovery in the job numbers at the moment. It's a vast improvement from what we saw in April. This is a good positive trend. We are making incremental improvements, But look, the road ahead, it's still pretty rocky.
Let's take a quick trot around Friday markets.
Well, yeah, look, the stock market is delighted that the COVID case has been linked to a source. Trading early on was very flat. We did have a very strong showing this afternoon. So the market did finish up 30 points to 12,700, which is the fifth record close in a row. Our dollar is sitting at 68.2 US cents, 94.4 Australian and 52 British pence.
Thanks, Nicholas. Nicholas Poynton there with Business.